Thank you, Senator Toomey. Senator Reid from Rhode Island's recognized.
Thank you, Mr. Chairman, and thank you, Madam Commissioner and Director. In May 2021, the GAO released a study about challenges that insurers and policyholders face in an evolving market for cyber insurance. Director Seitz, can you explain the key challenges that GAO identified with respect to pricing cyber insurance and ensuring that policies provide appropriate coverage?
No, thank you, Senator, for your question on that topic. We have closely reviewed the GAO study and contributed to it, and we agree with the conclusions in that study. I think in particular, looking at some of the pricing challenges and price increases that have been happening for the sector. Additionally, you're seeing some of the carriers withdraw coverage from certain parts of the market. I think in particular, an area of focus for our office as we administer the Terrorism Risk Insurance Program is the extent to which cyber coverage is available to small and medium enterprises. I think in particular, we've collected information for the first time last year regarding the extent to which SMEs can access that coverage. And that's going to be a priority of our work going forward, and additionally, an aspect of the work that we're doing with CISA regarding the catastrophic backstop for cyber insurance.
At this point, just for clarification, terrorism insurance, would that include cyber attacks, or is that sort of a function of the type and degree of the attack?
The Terrorism Risk Insurance Program does cover cyber insurance written in the TRIP eligible lines of insurance. And with regard to our work in that area, it's an issue that we've discussed extensively in our prior reports, particularly looking at how the certification provisions under TRIA would apply to cyber events when you're looking at issues of attribution and elsewhere.
Thank you. Commissioner Bahrain and Director Seitz, how are NAIC and FIO respectively working with the insurance industry to address these challenges of cyber insurance? And every day there seems to be a new dramatic challenge presented by cyber or something. So this is the beginning, not the end of our discussion. Madam.
Thank you, Senator. I would say with respect to the NAIC, the first thing that we've done is develop a cybersecurity supplement by insurers for insurers' annual statements so that we can track very closely and gather information about insurers who are writing cyber insurance coverage in the U.S. We utilize the data that we've captured within this cyber supplement to monitor the risk and monitor what's happening in the markets. I think what we can confirm is that between 2020 and 2021, there was an increase of approximately 75% in direct written premium, but it's very clear that growth was due primarily to pricing increases rather than additional coverages. And so our data confirms that along with an increase in the frequency and the severity of cyber attacks and the number of cyber claims that are continuing to increase, premiums are going up, limits are going down. It's a much harder underwriting environment. I would say with respect to the market as a whole, we are actively engaged in efforts to look at what is the appropriate backstop, how do we make sure that there is a robust financing mechanism available, even in the event that the insurance market does not have the appetite to cover all of it.
Director Seitz, any comments?
No, I think Commissioner Bahrain said it well. Thank you.
Commissioner, you clearly point out the increasing prices of cyber insurance, which obviously affects every business, particularly small businesses, municipalities. And what steps can the state regulators take to try to reduce those premiums and ensure coverage is available?
So insurance is fundamentally based on risk. So pricing is based on risk, and insurers engage in risk-based pricing. That's what we expect them to do. And so as risks increase, so do premiums and costs. We have switches that we can toggle in terms of opening up markets like the surplus lines market or captive arrangements for certain companies in certain circumstances. But at some point, there are risks that are very high. They are either too large or they're too volatile or they're too certain to be able to be as affordable as we would like them to be. I would point out that what we see happening in the market, in the tightening of the market, the increasing costs and the increasing underwriting standards also creates a discipline. It also helps with good cyber hygiene. So part of what it does is it asks businesses to themselves be more responsible in terms of taking their cybersecurity risks seriously. And as companies pair with insurers to do that and mitigate and reduce their risk, then that allows their programs to be more affordable.
Thank you very much. Thank you, Mr. Chairman.